business.
Thank you very much. Mr. Benatar, Treasurer Benatar, while House Republicans are focusing on federal regulators of banks and credit unions, Democrats thought it was important to have additional local government perspectives on what anti-ESG attacks mean for their banking relationships. I understand that earlier this year, you led a letter signed by Democrat and Republican county treasurers in your state opposing anti-ESG legislation that would have limited the ability of certain banks and others to do business in the state of Arizona. What would the impacts of this legislation be on your county and on your work as a county treasurer? Have you heard similar concerns from other local or state treasurers in other parts of the county?
We have heard from other states that have passed these anti-ESG legislations that it has increased their costs and it has also reduced the number of companies they can do business with. So my role as president of the National Association of Hispanic County Officials has allowed me to connect with my colleagues across the country. And studies are also have come out that are saying the same exact thing. You look at Texas, it's going to result in billions of dollars, and right now they're paying an additional $300 to $500 million just to do bonds in their state. You look at Florida has a higher rating than California, yet they are paying higher interest rates due to anti-ESG legislation that are passing. So that was a concern of ours in Arizona because we are very limited in who we can do business with right now, and reducing the number of financial institutions that we can work with will have dire consequences within our communities and will cost our taxpayers money.
Can you give us some insight on what has been alluded to here today about pressure that's been placed on banks and our financial institutions from these foreign entities worldwide, etc.? What do you know about that?
So I have a fiduciary duty. I have a duty of loyalty to the residents of my county. And for me, the most important thing is the public safety of our dollars. And not just for today, but for generations to come. And doing that, I have to look at best practices. And that includes things like climate risk analysis in my decision making. That includes looking at regulations. That includes being able to find the information so I am analyzing risk to the best of my ability. And this is also noted by nonpartisan organizations for government financial managers across the country. So I need to be able to easily access that information, including climate risk, when I'm evaluating my investment decisions, but also my cash flow analysis. So although I may not know the information necessarily about the international groups, I do know that there are best practices out there that I do need to follow in the work I do.
You've alluded to your fiduciary responsibility. And in alluding to that, what you're saying is you must take into consideration all of the possible risk, et cetera, as you make decisions. Do you have any further comments about fiduciary responsibility? Because that's very, very key when we're dealing with our financial institutions, our banks, et cetera.
Thank you. No, that is the number one priority of mine, and it is the number one priority of government officials across the country. And for us in local government, safety will always come first, then liquidity, then yield. And for me, climate analysis and climate risk is real. In my community, we have been facing fires and flooding for well over 10 years. Without using and including climate analysis in my day-to-day work, I would not have the cash flow available to be able to free up the money, not just for my fire district for a fire, but for the 20, 30, 40-year flooding events we will now be having. And that also means in my investment portfolio management, I need to make sure I'm considering that as well. So for me, safety will always come first because taxpayer money is at stake.
Well, I thank you for that very profound information. As you know, I'm from California, and we've had fires that unprecedented in the state of California. So I hope that you in Arizona, California, and other states that are experiencing these kinds of devastated natural causes, that you will have the kind of information that you need to help people understand exactly what is going on with climate risk.
Gentlelady's time has expired. The gentleman from Florida, Mr. Posey, is now recognized.
Thank you very much, Mr. Chairman, and I thank all the witnesses for your testimony and your time to appear before us this morning. At the Financial Stability Oversight Council hearing before the Senate Banking Committee just about a year ago, Senator Toomey asked Secretary Yellen if there had been a single failure of a financial institution as a result of a severe weather event. She acknowledged that she wasn't aware of such a failure. Can any of you identify an example where a flood, hurricane, or wildfire has resulted in a financial institution's failure? I will start, I guess I'll like to ask each of you to answer. We'll start with Secretary Benatar and come across.
I will personally say that in terms of financial institution, I do not know any knowledge, but I do want to point out that
you answered my questions. Thank you. Mr. Jones?
Yes, there were 2 credit unions that failed as a result of the impact of Hurricane Katrina, one causing a loss to the Share Insurance Fund of about $500,000.
Okay. Mr. Gibson?
Not aware of any bank failures that can be attributed directly to climate change.
Beverly?
The same answer. No failures attributed to climate change or weather events.
The same answer. I'm not familiar with any bank failures related to weather events.
Experts tell us there are 2 kinds of climate-related risk. Natural risk that I just asked you each about, and the risk to financial positions for transitioning away from things like fossil fuels to other energy sources. Can you please give a clear, concise example of a credible, material, and imminent financial risk of climate change that warrants the government's imposing a climate risk management discipline on financial institutions and at the expense of climate scenario analysis at this time? And we'll start with you, Mr. Coleman.
Thank you for the question. I would start with a physical risk. So, for example, you could have an institution that relies upon the collateral value of some type of property. That property was impacted by a climate-related financial risk, could impact the value of that collateral. That could also impact the ability for that property to cash flow, which could then impact the value of that asset to the institution.
Thank you. Ms. Haberly?
Institutions have relied on insurance to mitigate the risks of weather events, and institutions are now experiencing, and their borrowers are experiencing, increasing costs of insurance, and that affects how institutions underwrite loans to make sure borrowers can continue to repay in the future and also rely on the value of the collateral pledged, if any. So that's been one impact. And then insurers pulling out of states have generally contributed to the increasing costs, where insurers don't want to take the risk because of the increasing severity or frequency of weather events.
Thank you. Very good. Mr. Gibson?
Another category of climate risks is transition risks. Those are risks from changes in market sentiment or consumer preferences or policy technology that affect that are driven by climate change. So, for example, if a borrower has a concentration in a particular technology that becomes obsolete because of changes due to climate change and new technologies, that could be a risk to a bank's creditworthiness.
Thank you. Mr. Jones?
So what I'd add is I agree with Ms. Eberly's comment regarding insurers pulling out of certain states and making the costs of owning a home much more expensive, and credit unions have reported to us that they are seeing that. The other thing I would add is we've also seen not just the risk side but the opportunity side, and credit unions being very resilient in responding to the needs of their membership have designed certain consumer loan products specifically targeting green energy products and the like, and so we've seen the business opportunity side of that as well.
Thank you very much. Treasurer Benatar?
On a local level, it impacts our budgets. It will result in significant increases to our expenditures, which means that we need to make sure cash is available without actually selling bonds at a loss or investment positions at a loss to free up the money, which ultimately results in increases to our taxpayers.
Thank you all very much. Mr. Chairman, my time is about to expire, so I yield back.
Gentleman yields back. The gentleman from Illinois, Dr. Foster, is now recognized.
Thank you. Now, I guess I'll start with Dr. Gibbs on this. Looking internationally at banking regulation, are we considered laggards or leaders or somewhere in the mainstream on responding to climate change?
I would say we're with our international counterparts and other supervisors and central banks in identifying climate changes and emerging risk to banks and to financial stability, and we're all learning from each other, I would say.
Thank you. And as you participate in forums that are funded, for example, by the financial services industry and so on, do you spend a lot of time looking at the details of who is funding the different forums, or do you look at the quality of the ideas presented in those forums?
Well, I think we spend the most attention in the international forums on the content of, what can we learn from others. We do pay attention to who funds different forums, and we have, ethics rules around things like that.
Now, the climate change is only one of the future risks that we have to look at. Are there, obvious examples are like artificial intelligence. If I was worried about a credit union that provide financial services to actors and Hollywood screenwriters, I might be very worried about my financial health in the coming years due to artificial intelligence, or just these life extension therapies that mean it's very likely that many more Americans are going to be outliving their financial savings, their life savings. Things like these technological threats are coming at us. Is there a general risk framework where you prioritize the different future risks, or do you handle these on a sort of one-off basis? I'll try Mr. Coleman on that.
Thank you for that question. At the OCC, we are focused on the safety and soundness of the institutions we supervise. Dating back to 2014, when the OCC implemented our heightened standards regulation, which addresses risk management frameworks for the largest, most complex banks that we supervise, that lays out our expectations for any type of emerging risks, whether they're internal or external, that could impact the risk profile of the institutions. We also work with our National Risk Committee to better understand the emerging risks that our examiners are seeing in the field and how we need to address those. If you refer to our most recent semi-annual risk perspective, you'll see we've been focused on a variety of risks, including liquidity, compliance, operational, and credit risk. So we take a holistic approach looking at these and apply an approach to ensure that we're taking a risk-based assessment of these risks and how they could impact the institutions we supervise.
Yeah, but you also have to consider exogenous risks that don't come from management practices inside the the banking industry, but also things like pandemics. There's a long list of things that could really disrupt. Is there an ongoing process that says here is our list of tail risks that we're worried about? Here is what our current evaluation of how we should prioritize them. What is there? Is there a general procedure here, or is this a sort of you handle them individually?
Yes, there is. That's part of our National Risk Committee process, and we publicize the findings of that National Risk Committee twice a year on our semi-annual risk perspective.
Do you remember offhand what the top 5 risks are that do you rank the risks that you're worried about coming at us?
In the most recent semi-annual risk perspective, the top 4 risks that we identified were liquidity, compliance, operational, and credit risk to the largest institutions.
Okay, but I was referring to sort of exogenous risks of things that can come get you, or do you view that actually most of the real risks that you're facing are self-generated by the banking system?
No, we consider risks from the outside. So, for example, cybersecurity risks, the impacts of digital technology, and also climate-related financial risk is included in that semi-annual risk perspective.
Okay, I guess you've probably cost me another late night reading your latest report, but thank you for that. Let's see. I was wondering, is the anti-ESG legislation, is that something that's happening, internationally, or is that sort of a peculiarity of the United States? Is anyone familiar with any other country which is doing this?
I am not. As far as I know, it's just here in the United States.
Okay. That would be interesting, and if anyone has more details on that, I'd be interested. Well, thank you, and my time is nearly up, and I'll yield back.
Gentleman yields. Gentleman from Missouri, Mr. Luchtenmeyer, the chairman of the National Security Subcommittee, is now recognized.
Thank you, Mr. Chairman. Mr. Gibson, Dr. Gibson, Chairman Powell has often said that the Fed will not be a climate policy maker. A little while ago, the chairman was talking about the NFGS, and it has in their statement a purpose here, the explicit purpose of mobilizing mainstream financial support to transition toward a sustainable economy, which includes directing capital to green and low carbon investments. Mr. Gibson, is the Fed committed to promoting green energy as the NFGS mission states, or is it committed to not promoting green energy as Chairman Powell claims?
So we do participate in the NGFS and the other international groups, but we make policy based on our own domestic mandates and in the best interests of the United States. So,
well, do you think it's in the best interest then of the Fed to stop its involvement if you're not going to support their mission?
Well, our main benefit of participating in organizations like that is to learn from others and other.
That's not a very good answer, sir. If you're going to be a participant, you're either going to be with them or against them. To sit there for information, you go read their position papers to get that. Mr. Powell and the Fed needs to do one or the other. Either get involved with that agency or get out of it.
So the standards that are agreed to by international organizations like
well, then again, we shouldn't be listening to standards for international organizations. We're the United States of America. We have the largest economy in the world, the best banking system in the world. We don't even have somebody else telling us how to do our job. So, sorry about that. I just can't believe that this is where we're headed. I find it also troubling as supposedly independent bank regulators are now trying to insert partisan climate policies under the guise of helping financial institutions understand and guard against climate-related financial risks. Under the Obama administration, FDIC Chairman Gruenberg was godfather and creator of Operation Choke Point. He led and directed FDIC work hand in hand with the Obama administration, pressuring banks to cut off or reduce financial services to businesses liberal progressives and President Obama didn't like. We found out about it and we stopped it. To me, this seems like a disguised version of Operation Choke Point, where regulators are again picking and choosing what industries have access to banking services and credit. Ms. Eberly, how is this not different from a different way of achieving the goal Mr. Gruenberg and President Obama set out with Operation Choke Point?
First, I would note that Operation Choke Point was a Department of Justice initiative, and our Office of Inspector General indicated that
Ma'am, I'm in the middle of Operation Choke Point for 4 or 5 years. I've got a copy of an email from Mr. Gruenberg talking about this, so don't go there.
Okay.
Now, can you answer my question or not?
I will answer your question. I will tell you that our policy is clear and it hasn't changed, that institutions that can properly manage customer relationships and effectively mitigate risks are neither prohibited nor discouraged from providing services to any category of customers or individual customers operating in compliance with applicable law. And we have processes in place to provide transparency and accountability around our policy. And our focus on encouraging financial institutions to consider climate-related financial risks in a manner that allows them to prudently meet the financial needs of their communities.
Thank you for that. You can send me your written statement there if you're going to read something that you've got written down. Dr. Gibson, by its own admission, the Fed has said climate-related financial risks are not fully understood, measured, or modeled. Why should the American people be comfortable with the Fed putting forward the idea that it can now monitor and help banks manage climate-related financial risks when you cannot even effectively monitor and help banks manage the basics like interest rate risks?
So our supervisory mission is to ensure that banks are operating in a safe and sound manner and managing all their material risks. And so for us, that definitely includes the traditional banking risks as well as the emerging risks, climate-related financial risks.
It's interesting you talk about managing all your risks. A while back we had an asteroid that almost hit the Earth. It came close to our atmosphere. I suppose you probably weren't managing that risk. We have a volcano that exploded last week, ash 40,000 feet in the air. It's going to affect us somehow, some way. I don't know if you guys are measuring that risk or not, but volcanoes do go off as well. We have a smoke from a fire up in Canada. It's affecting how people are doing business and living in this country right now. Are you guys managing any of that risk as well? Those are all definite risks that are here today. Did you foresee those things? Or are you managing those risks? Anybody? No. So we have a risk here that we think we have. I have a letter here from or article here of this, from the Manhattan Institute that talks about, let us state a plain and obvious fact. Climate change is an important challenge, but climate change poses no measurable risk to the financial system, not individual banks, but to the system. The emperor has no clothes. And with that, my time is up, but I think.
Gentlemen,